Hi there, I'm Irk, and this is my channel, Get Irked. In this episode, Carnival Cruise Lines. Is it smooth sailing ahead for this stock, or is it an iceberg waiting to sink your portfolio? In this episode of Speculating In, we're going to be taking a look at Carnival Cruise Lines, ticker symbol CCL. The cruise line sector is made up of an oligopoly of just 3 companies because each one of these cruise ships cost an average of more than $500 million to make. In addition to its namesake Carnival, the cruise line also operates under Princess Cruises as well as Holland America and many more worldwide. Combined, the ships visit over 700 ports each year. The all-inclusive amenities combined with visiting exotic locales has made it so cruises appeal to all age groups lately. However, with potential variants of the virus still a very real possibility, it's important to remember that whenever that happens, it turns these ships into giant petri dishes. While Carnival Cruise Lines was able to secure enough funding to stay afloat, pun intended, if this kind of lockdown happens again, it could bankrupt the company, so it's important to remember that going in. Let's take a look at Carnival's fundamentals. Naturally, none of the cruise lines are operating at capacity right now, so they're all losing money. However, when Carnival reported earnings at the end of September, it ended up losing even more money than was anticipated by analysts. The company reported a loss of $1.75 per share when analysts were expecting a loss of $1.53, a miss of nearly 14%. And you can see that its earnings per share is negative $8.51, which is far from good. Just like the other cruise lines in the sector, Carnival did offer a dividend, but just like the other cruise lines in the sector, they all froze their dividends in February of 2020 so the money could be used in investing in the company's survival. And since the company's ships haven't gone back out to sea in big numbers, it's hard to know whether that dividend's ever going to return in the near future, so do not invest in this stock thinking that it will pay a dividend at some point soon. Due to the unpredictability of when the cruise lines are going to be able to go back to full capacity, no one really knows where exactly these stocks are going to go in the future, so there is no one-year estimate for the stock. Additionally, most analysts, including Yahoo Finance, rate the stocks as overvalued since they aren't making any money, they're just losing it right now. That means if you wanted to speculate in Carnival Cruise Lines, you'd have to refer to the technicals, so let's take a look at Carnival Cruise Lines on a chart. First, I'm going to give you a buying plan of what I would do if I didn't currently hold positions in the stock. Then I'll go over my own investment, the one that I cover in my speculation and play portfolio, which you can follow along for free at getirk.com. You can see that during the pandemic sell-off, Carnival Cruise Lines really sold off, dropping nearly 85% from where it was trading before the sell-off started in March. So to develop a buying plan, let's start by drawing a Fibonacci retracement from Carnival's low in the March sell-off to its high from 2021. Fibonacci retracement uses the Fibonacci ratio to show you levels where there might be support should you want to buy the stock at different points as it sells off. You can see that recently this 200-day moving average, the blue line that you see on the screen, has been presenting a lot of resistance. Carnival hasn't been able to get up and over the 200-day moving average and then stay there. But with the medical advancements that we've seen from the drug companies in treating COVID-19, I believe that Carnival Cruise Lines and the rest of the vacation sector may be recovering much faster than a lot of analysts anticipate. You might consider doing your first buy down here around $24.10. After that, you can see that Carnival found support down here around $21.31. So despite not being at a Fibonacci retracement level, I think that might be my good second buy. After $21.31, you can see the 50% retracement down here at $20.20. However, in the past, Carnival has pulled down beneath that, so I'd probably shoot for $19.19, maybe a little bit higher in order to catch the bounce. From there, we zoom out, and you can see we have the 61.8% retracement down at $17.27, which has found support in the past, right about here at $17.33, so this would make a good fourth buy. After that, looking at the 78.6% retracement at $13.11 shows you support in the past here. I'd probably buy at the open of this day, which is $12.34, so we now have our fifth buy. From there, for my sixth buy, I'd look toward the low of the pandemic bottom, but instead of going for the all-out out low at $7.80, I think I'd use the low of this day where it had found support at $7.90, or I might even shoot for a little higher than $8 to see about getting my last buy. Using my technique of buying 50% initially and then 10% at each level, you'd see that you'd have a 50% at $24.10, followed by 10% at $21.31, $19.19, $17.33, $12.34, and your final buy at $7.90. However, that being said, I really don't anticipate seeing Carnival Cruise Lines sell off to that extent unless we have another black swan event. In fact, I wouldn't anticipate us going much lower than this 50% retracement, so you'd probably have a 70% allocation. I don't think we'd see it get below $19. However, stranger things have happened. From here, let's take a look at my own speculative investment in Carnival Cruise Lines, which I first opened during the pandemic sell-off in March 2020. I made my first buy on March 12th of 2020 at $16.50. From there, I made my second buy on March 17th of 2020 at $12.22, which lowered my per share cost to $15.43. One day later, on March 18th, I made my third buy at $9.45, which lowered my per share cost to $13.26. I took profits the first time on March 26, 2020, after Carnival bounced from the bottom with a sell at $18.36, which lowered my per share cost to $10.65. I took profits the second time on June 8th when Carnival popped over $20, with my second sell going through at $24.71, which lowered my per share cost to negative $1.01 per share. A negative per share price means that each share adds $1.01 to my portfolio's bottom line in addition to the value of each share. From there, for the rest of 2020, I kind of let Carnival play out. With no capital in the position, I had no risk at losing money, and I wasn't really wanting to add any capital back in until we saw where the cruise lines would go once the pandemic was under control. On January 4th, I made my fourth buy at $20.20 when it looked like Carnival was pulling back to a point of support. This added capital back into my position and raised my per share cost to $4.30 per share. From there, I continued to allow my position to play out through the rest of 2021, as I wanted to be careful not to put too much capital in too soon in case we saw a variant that really knocked the stuffing out of Carnival and the rest of the cruise line sector. On September 1st of 2021, I made my third sell at $23.44, once again taking all the capital out of the position and giving me a per share cost of negative $2.09, because it looked like Carnival was going to be rejected from the 200-day moving average, which is exactly what ended up happening. And that brings us to today. I'm not planning on adding any additional capital into Carnival until it retests this level here, and my buy target is $21.45. Just as a reminder, this is a speculative investment for me. I'm not risking nearly as much as I would in my investments in Play portfolio. And the reason for this is that I'm not entirely sure Carnival Cruise Lines is going to survive. It looks good right now, but as the future goes on, we don't know, and another black swan event could actually take this company entirely out of the game. Thank you for watching. Please hit like and subscribe, and I'll see you in the next video.